guys, so I want to just pick back up from the last video. We talked about the Fab Four in the first, entry events in the second, and then we talked about identifying the narrow states of the SMAs. This is key because once the entry event triggers, we have to know when the optimal execution time is, and that is told by the SMAs, right? So I'll give you some examples here in a second, but this video I just want to show you guys putting the SMAs together with two of the most powerful entry events that I have. Okay. First is going to be the color change. I'm just going to walk through this, guys, with you. We'll kind of go over everything. So yesterday, this is the last 30 minutes of price. Last 45 minutes of price, about somewhere around this range right there. And if price were to open above it, obviously we would be bullish. If price were to open below it, we'd be bearish, right? That's just getting our bias from the first video that I made, right? So that's easy. Right here, we opened in it, neutral. So nothing too crazy. We're just going to wait and see where price goes. Once we've seen some green like this, okay, now we're above the Fab 4 up here. We're thinking that we can continue. What I look for is the state of the SMA. So right here, we can see this is a pretty neutral-ish state, not too wide. And then right here, we've got a narrow state, right? Things like to happen mostly out of the narrow state, sometimes out of a neutral state. Out of a wide state, we stay away. But anyways, we can see here that inside this box, right, the 20 was pointing down, correct? And the 200 was underneath the 20, okay? We can see here, let me see if I can move this box. We can see right here that price started to drop significantly underneath the SMAs, and when it did, we can see the 20 moved underneath the 200 right here. We see that? My point is, if price were to have continued like this 20 would have continued this way, and the 200 would have been more so like this, right? Because when we look for shorts, we need this 20 to be underneath the 200. Think of it like a ceiling, or a level that price has to get through to go back to the upside. If this is the 20, this is the 200, this is price right here. We have two levels, two walls, if you will, of resistance. So price would have to bang up against this, boom, then bang up against this, boom, then go all the way above and start moving back to the upside. So when the 20's underneath and the 200's above, this gives us reassurance that price will continue in the downward direction because we have two ceilings above us, right? If I'm saying if this would have continued, that would be my point. If this would have continued and this 20 would have started curling down like this. Now, same thing for the opposite of that. Whenever we're going up, we're looking for the 20 to be above the 200 and the 200 to be below the 20. Reason being is this is the floor. So now price would have to come all the way through this, then all the way through this, and then all the way down. So this is a floor. So whenever we see a narrow state like this, if the 20 starts to go above the 200, we're looking up. The 200 is below the 20, that's confirming up, right? Same thing for down. So you add this into this, and you say, oh, we opened above, or oh, price is above, I'm already looking for longs, and then we start to see the 20 point up and the 200 below, I'm even more looking for longs now. Now I'm just waiting on my entry event. That's all I'm waiting on. Remember this 200 as the parent, the 20 as the child. They will separate. When they do, there's opportunity. Right? So the next thing we do, is we identify the Fab 4. Let's just roll through it. Identify the Fab 4, right? Once we get up here, we're looking for longs. What's our entry event? Elephant bars, color change engulfings, GBIs, gift zones, right? The 5 that are in my PDF. We're going over 2 today. So let's look at a color change. Once we are up here, we're green on the day. Price is green. Higher highs, higher lows. Price is green, right? Now I'm looking for an entry event. Okay? Right here, I start to see a red candle, right? And then a green. But this green does not take out the red. The top of this green does not go up here like this. So I would not enter this. This is not an entry for me, right? We wait. Let's say we're right here. None of this is even here yet. Right here, we can see the 20 is starting to curl up a little bit. Not too much, but it's curling up some. The 200's underneath. Still no entry yet, but just we're taking note of that whenever we're right here already. So we're still waiting. This candle, nothing. This candle, nothing. Just because we broke the highs right here does not mean I'm entering long. So nothing. Boom, we get a red. Whenever we get this red, I'm taking note of where the SMAs are. 200 is below, 20 is curling up, right? So my immediate reaction is if the next candle after this red candle right here is a green candle and it overtakes the top of this red candle right here, I will enter long immediately on this break. I'm not going to wait for the close. I'm not going to think about it. I'm not going to call my mom. I'm not going to do none of that. I'm going to enter immediately right here. Place my stop loss directly below that red candle right there and move to the upside. Now, this is the square box is the risk, right? And obviously you can see the reward. This is why I love color change engulfings near the 20 is because of there's such a tight stop, right? Versus if you were to buy at the close up here in this power bar, you're going to have to put your stop either below this or below the and that's just a lot of risk. Not saying it wouldn't have worked, because it would have. So power bars are fine. Elephant bars are fine. All about what works for you, but the risk is less on the color change engulfings near the 20. So this is just me giving you an example of a clean one. And realistically, this is one here too. This is a double tails with a color change at the 20. You place your stop right here, and you go for the second move up, which you got here. Still no stop out. Boom, you got 2 legs right there for more profit. If you missed this, is my point. That's how powerful this strategy can be. Now, also, I want you to note something. Note the SMAs here. Parent, child, right? You see, whenever they start to separate, that's when opportunity comes into the market. We already talked about this. We're green on the day. We're above the Fab 4, which is here. Price is a narrow state. Things like to happen out of a narrow state. So we have a narrow state. We have the Fab 4. Price opens above the Fab. Well, price goes above the Fab 4. Then we get an entry event right near the 20 as it's curling up with the 200 below. Right? You get that. Right here is peak time for longs. So let's say you buy long, you place your stop right here, you enter here. This is your stop right now. Boom, we're in this trade. Once we go 2 to 3 candles after the entry candle, we're taking some profit. 1, 2, 3. So right around here, we're taking some profit off. Boom. When this happens, we move our stop loss from here to this 20. Now we have no hard stop loss in the market. We have no specific level in the market to exit this trade. We are only exiting this trade when price breaks below the 20. That's it. The reason why is because the 20 is acting as a floor. It's acting as support. Remember how I was talking about that? 2 things of support. See, a floor, a ceiling for shorts, a floor for longs. This is why. Look at this a red candle here. This was red. All this was red and got pushed back up by buyers because price came back near the 20. It's coming back to the floor and it's getting pushed up and up and up. So if you would have taken your profit here, which is fine, it's not a bad thing, but you would have left another 2 moves higher highs on the table. And if you would have just used your stop loss on the 20 after you've taken this first profit, instead of using it at this support here or this support here, or whatever, or going by a dollar amount, then you would have missed this move. But if you use the 20, you would have been able to capitalize on this move, and then once price broke up here, that's when you're exiting. This is your stop. So that's why using the 20 as your stop is very key. After you get a 2 to 3 candle push move after the entry candle, or if you wanted to take some at the highs, or if you wanted to take some wherever, you can mark the point. Take profit is really up to you guys, kind of whatever you're comfortable with, the trader is. But I just kind of go for 1, 2, 3 candles after the entry. I'll take some profit and I'll use my 20 as the stop. It's just gonna go better. We can see here how the parent, this big 200, this is the child. You can see it moving up like this, and we're using it as our stop loss once it goes up here. The reason being is because we know once price breaks below this 20 like this, it's going to naturally want to come back to the parent, just like a child does whenever it leaves and has to come back home for a year or 2 or whatever. Once you're in this wide state like this, not this narrow state, not this neutral state, once you're in this wide state, the SMAs are going to naturally gravitate back to each other, which means price is going to come back to reality at some point here soon. This is a child, this is a parent, right? The child wants to go away at first. There's opportunity in that, realizes it's hard, comes right back to the parent. Right? That's just another way to look at these SMAs here. Now another thing is this RBI, GBI. I'll give you a quick example of this. Nothing too crazy on this one, but let's see. I think it was Google. It was a good color change, but also it's a little RBI. You can see here. Nice power bars all in the market. 1, 2, 3, 4. Now I know these bars are a little smaller, but there are no wicks at all. I mean, volume was very, very heavy there, as we could see. But we see this nice power bar here, solid bar. Then we just get one red bar, right? Boom. And then directly after that, you get another solid bar taking over the high of that red bar. That's a color change, yes, but it's also a red bar ignore, because the market ignored this red bar. It totally just was like, you know what, green, red, well, here's some more green for you. When you see that, that's strength. Now, you can wait on the color change up here. You can wait on these and get you a little 2-leg move. But this right here is just showing you so much strength, because it's just told the market's just ignoring this red bar. Like it wasn't even, there was no pullback, there was no little consolidation and then a move, there was nothing. It was a red bar. Sellers tried, buyers bought it up right back up and said, don't think so. Right? So this is just give you a quick example of that. Nothing too, you don't have to go into deep detail with this one. It's just when you see a big power bar in one color, then you see a different color directly after that power bar. Then after that color is the same color as the original power bar with another power bar. That's just power. Like it's just solid. That's very, very small. It's ignoring the red in the market. Something to take note of. Now you can take note of this and not enter. Just know, okay, green power's here. So when I get a nice color change, I'm gonna enter. Whatever you want to do. It is fine with you. It's fine, but make sure when you're entering, you're coming from narrow states. The 20 is trending up. The 200's below the 20 if you're going long, right? Then once you get up here into this area, what are we noticing? How wide the state is. Once the state gets wide, we know what? It's naturally going to come back down, right? So we need to either exit the position, we need to take whatever you want, shorts to the downside. I wouldn't recommend, I'll get into that detail later. This is called a trap zone. All of this is called a trap zone, and we can get into that on another video, but just showing you guys two examples of the color changes coming from the Fab 4 narrow state, what we've already gone over, and a GBI RBI. Small little red bar, ignore. Nothing too crazy here. Okay, guys. Just wanted to show you guys some the two entry events I like to use with the narrow states we talked about yesterday, identifying those narrow states in the last video. Wanted to kind of put it all together for you guys, you know. So, and you can see same for here, narrow state. The 200 is above the 20. You see that? And the 20 starts to curl down. When it curls down, you get that boom. Right here, you get that boom. This red bar broke below this bar. Boom. Right here, you get that. Right here, this one broke below this one. Boom. And you can take these short. You take these short. You know what I mean? So they're there. You just have to know that the SMAs need to line up a certain way. 200 above, curling down from the narrow state, confirming with the Fab 4 direction. Right? So just kind of... yeah, that was us yesterday. This is the state. This is, again, the wide state I was talking about. Narrow state, neutral state. We can see how price comes right back down whenever it's in a wide state like this. It's just the way it goes. We identified the position another time. We'll worry about that later. But, alright guys, so I guess that's it for this one.